Whatever it takes, all in moments, size matters, okay, fine. But, there are a lot of people who are thinking about this and going, look, this whole press conference tomorrow that everybody's looking out for, highly anticipated, et cetera, the theme, the way it's titled is, it's about intensifying counter-cyclical adjustment of fiscal policy, which a lot of observers have noted is a clear indication. If that's how they're describing the press conference. They're thinking the problem can be approached or addressed in a cyclical manner, not as Shree's been suggesting for days now, a structural manner.
Well, I think that's partly correct. So, and I think the reason they say that is because it's going to be multiple steps. And as we just heard, there is no magic bullet for this, and you can't fix it at one go. Even if it is structural, they would rather say we're going to do this in a cyclical manner because there are certain cyclical elements. That's true, and they need to be addressed first. And you can't fix it. It's not like throwing a humongous amount of money and you're going to fix all the problems, right? It's not going to go away overnight. So, and I think that's really where it is. And by the way, and I think they're going to remain true to what they've always been. And by that, I really mean this. This is a great picture, by the way. Huh? If you take the 30-year performance, or you can take 35 years, whatever you want, since China really became somebody to deal with, which is in the 90s. So you take early 90s to now, you take the stock market performance, it's practically nothing. So which means the equity owner didn't get anything. But in the same period, the per capita GDP has gone from $350 to almost 13,000 whatever dollars, right? I mean, sort of ballpark. So if you really look at that, citizens of China have actually won, while the equity owner has not been rewarded. And I don't think this picture in the next 30 years is changing either.
So this is what worries me, okay? And I was talking to a colleague about this, I think, just yesterday. We've seen the China markets take off like a rocket on the 4th of July over the last 7-8 sessions, right? 25, 30%. It's absolutely nuts, right? And at least some of this, I think personally, is because the stimulus has been directed at Chinese institutions to allow them to borrow, to buy local equities on margin, right? And retail investors, all those grandfathers and retirees you see in the pictures we show all the time, they're going, well, this is great. If that's the case, I'm going to piggyback on that. But that's basically their life savings they're gambling with.
Sure, but
and we remember what happened in 2015.
Yeah, of course. But I think a lot of this, this sort of one-way street that we saw in the markets is also a lot of short covering. It happened before the Golden Week, so people didn't have too much time. It was the largest amount of shorts that was there on the Chinese market, so people had to scramble. So there was a bit of that scramble that you saw in that price, which is why now, in this last week, you're seeing more moderation. And I think after tomorrow's, like you said, there's just too much expectation for tomorrow's meeting. While MOF will definitely give you a much better picture than NDRC would have, right? Because they really do have the tools to provide you with that number. So they will. And whatever that number will be, as always, will be then chewed upon, people will digest it. So the market's not going to take off like how it did last, like I said, the July 4th kind of. I don't think that's going to happen. Right. I think it's going to be more modest. But I think, in a way, you could say the floor on valuations have been set as far as China is concerned. So to that extent, yes, we do believe there is still further upside in these markets. But it's not going to be this one-way street. So you're going to go up and down, but I think it's going to be up.
I wanted to ask you then, what do we do with this information, and do we scale in cautiously if valuations arguably remain compelling, and do we own e-commerce, which really speaks to the consumer, and remain cautious off the property market, which has got a long way to go, arguably, in terms of stabilisation?
I think there is some merit to that, as long as... So this is the story, right? I don't think you're going to see, from an historical perspective, a valuation multiple that's going to grow. So it's not multiple expansion, right? And there's a lot of story in dividend-yielding names in China. So they're really good quality companies that are paying a very, very aggressive dividend. So, and I think that's the first place to... And that's possibly the stable place to focus on. The rest, you could do a little bit, but I would tread carefully.